assess what types of benefits Susan's going to look at. Now, in a company this size, with only 11 employees, and getting group insurance for the first time, it's likely that Susan is going to choose a fully insured plan. So this is likely where she ends up, although it's increasingly common today for companies this size to mix it up a little bit. So maybe she will fully insure the life and the long-term disability portion of her plan. She might insure the short-term disability portion. She will probably fully insure the accidental death and dismemberment portion of the plan. So she'll likely fully insure all of this. But she may choose to self-insure we don't know for sure. We have to look at what her willingness to spend money is like. We have to look at what cost containment options are available. But we're going to maybe self-insure, maybe the drug portion, maybe the dental portion. And then likely, we would also fully insure things like travel insurance, if there happens to be travel insurance in a group plan, which is quite common. It's a fairly inexpensive provision. We would fully insure the EAP. We would fully insure the life, long-term disability, AD&D as indicated. We'd probably fully insure the medical portion of the extended health care plan as well. And then we might self-insure the drug and dental portions. We might even self-insure in some cases the short-term disability or weekly indemnity portions of the plan. If we do that, you'll recall that we're going to do a couple of things. That we're going to involve an insurance company here. We're going to bring in an insurer to do an administrative services only plan. And then, in addition to that ASO plan, we're probably also going to use some form of stop-loss insurance. That stop-loss insurance will be designed to make sure that if there's, for example, a catastrophic claim, that we're not going to end up with an amount that Susan's company cannot afford. So we look at the funding options. This is fairly important. And also at this point, Susan's going to decide whether she's going to pay 50% of the cost of her plan or more than that. In a situation like this, a retail situation, it's quite likely that she will pay 50% and the employees will pay 50%. But sometimes somebody like Susan might decide that they want to pay more than 50%. So at this point, we've figured out how Susan wants to fund her plan. She says, you know what, I'm just going to go with the fully insured plan. I don't really know about this self-insured thing right now. Maybe after a couple of years we'll decide that's appropriate for me. Okay, that's no problem. And she says, I'd like a fairly comprehensive plan, one that will be competitive and will ensure that my employees want to stay with me. So she decides to go with all of this stuff. Let's go with a completely fully insured plan, including drug and dental care, including our short-term disability component. Now we don't have to worry about administrative services only or stop-loss insurance because the plan is all fully insured. The insurer is taking on all the risk in this case. Now maybe she says, you know what? I would like to have a plan here that's going to allow maybe myself and the manager, this full-time manager, to have a higher level of benefits. Well, we can do that. We can break the plan down by class. So she says, for the dental portion of the plan, maybe for the rest of the folks down here, they're just going to have access to basic or preventative treatments. So these folks are going to have access to that basic or preventative treatment. But for the folks in a separate class, the owners and managers, these people maybe what we're going to do is we're going to have basic or preventative services, but we might also include maybe some orthodontic services. And this would allow Susan to put in claims, for example, for her child who she knows needs braces in a couple of years. So we can kind of manipulate the coverage to meet their particular needs. All the employees, all of these 9 folks, are going to have access, that is, they all have the opportunity to determine that they want basic or preventative services, while Susan and her manager are going to have the opportunity to determine that they want those basic and orthodontic services. So once we go through this process now, we bring back a quote, and the quote says, okay, Susan, here's what we propose. We propose to place this coverage with maybe one insurer, or maybe it's going to work better if we have a couple different insurers that we're going to involve. It depends on what exactly is appropriate. It's going to depend on the pricing and even on the types of features available. Maybe we have one company that offers a long-term, short-term disability plan that's very attractive for Susan, and another company that offers life and AD&D that's very attractive for Susan. She might decide to break those out. Although with smaller employers, your ability to negotiate your group benefits is more limited than it is for a very large employer. Now,